Hello, my name is James Hughes, Chief Market Analyst here at GKFX here in London. Thank you very much for your questions yet again, which have come exclusively from our clients in China. Thank you very much for sending those through. Again, we're going to go through a couple of them, 2 or 3 of those, and answer your questions for you. Please keep those questions coming in, and we'll try and answer as many as we possibly can every week when we go through the when we send the video. But let's start off with the first question today, and the first one is about France, Germany and the Eurozone in a whole, and just what's going to happen. The question is around the election. What's the opinion towards the election in France and Germany and black swan events in general, very much like Brexit? What sort of effect is that going to have on the European economy? Well, of course, firstly, that you're very much right that the French and German elections are 2 of the most major stories and events which are going to happen this year, mainly to do with the political change that we're seeing around the world, with Donald Trump becoming president in the US, the Brexit vote here in the UK. There is definitely a shifting political world, and we're seeing that very much with the likes of Marine Le Pen fighting against Francois Fillon in France and Emmanuel Macron as well. So those 3 people there in France are the 3 front runners. Now, the biggest risk to the market in terms of the French election comes if Marine Le Pen of the National Front, if she is to get into power in France. That's the biggest risk that we have from a market point of view. That's the biggest risk to the euro as well. Marine Le Pen has already said that if she gets into power, then she will look to put a referendum about EU membership, very much like the UK has done with Brexit. So it's a key battleground. The key dates to look out for that are April the 23rd. That's the first one. April the 23rd is the first round of voting. Then we'll move on to the second round of voting at the beginning of May. If the first round of voting, if someone doesn't get 50% of the vote, then we move to the second round of voting. Now, the favourite is still, despite a lot of scandals coming out about him, the favourite in France is still Francois Fillon. He is the favourite to become president. And if he does get into power, then that would be the best reaction for the market. That's what the market would like, because it keeps the markets calm and it doesn't give us the uncertainty. That's the biggest issue that we have globally in these markets. And when we have these black swan events, that's the problem that we create, because it creates uncertainty for the markets. And if that uncertainty continues, then that's when we see so much volatility in terms of the major markets. So very much keep an eye on that. Germany as well, but for now, France is the big one to look out for. The second question, we'll look at the second question here, is about China, is about UK, and is about the USA. And it's saying, how will Donald Trump's presidency and his policies, Brexit in the UK, and the reserve numbers of the FX reserve numbers out of China dropping below $3 trillion, how will those 3 things affect the major economy? Well, we'll first look at the UK. I think if we look at from a UK point of view, we're looking at real amount of negativity from the Brexit results initially, when the EU referendum was announced that we had voted to leave in the UK. But the downside has come already for the UK. We've seen the pound incredibly negative, and I don't think we're going to be looking at the pound trading at those lower levels anytime soon. We have recovered, and what we're seeing now, whenever we hear a headline around Brexit, or if we hear some news about a vote or a triggering Article 50 or discussions happening between the EU and the UK, what that gives us gives us certainty. It gives us some more information, and that helps the pound. So that pushes things to the upside. Now, if you look at that from the other side, you look at it from the USA, and you look at Donald Trump, President Trump, and what he's been saying, his policies around immigration, his policies around tax, executive orders being signed pretty much every day at the moment. Now, with that in mind, that is having an effect on the US dollar the other way. It's causing so much indecision for the US dollar. One day we're seeing the markets very much higher in terms of the US dollar. The next we are seeing it very, very weak. Now, the problem with that is that we will continue to see those big swings in the US dollar, and that means the likes of China and the UK in terms of the currency, the renminbi and the pound, they will both be incredibly volatile. But from that point of view, I think from a pound point of view, we've seen the negativity, we've seen the downside, and maybe we won't return to those lower levels. Looking in China, the announcement of the FX reserve figures dropping below $3 trillion for January was a surprise. It's the first time in 6 years that FX reserves in China have dropped below $3 trillion. Now, we know that these numbers have been moving aggressively to the downside. If I just check what we've seen in 2016 in general, we saw those reserves burnt through by $320 billion. In 2015, we saw them fall by $513 billion. So those reserves continue to come away from China, and maybe it's a case now that the economy has recovered to a certain degree. The Chinese economy has recovered to a certain degree, and we are seeing a better picture. The world isn't as worried about the Chinese economy, but everything will depend on growth and the growth figures that we get. The growth figures were slightly better than expected for 2016, but we'll have to look at what they start to say for January and February and throughout the first quarter. That's going to be the interesting point to look out for. But again, with the currency, it's a very similar story, that a lot of that is dominated by what's happening with the US dollar. Why the US dollar is so volatile and can't hold on to any movements one way or the other, then we're likely to see that the dollar renminbi continue that movements. Already in 2017, we are the yuan is up against the US dollar, and I think if you look throughout 2016, the renminbi lost around 6.6% against the US dollar. So it's recovering so far, and the question will be about continuing to recover from where we are now. Now, the last question that we're going to look at does surround gold and does talk about gold, and pretty much basically asks, what is the trend for gold in 2017? Well, it's very hard to tell, of course, what the trend is going to be for the whole year, but one thing that we do see in gold is we see gold likes to range trade, meaning that it likes to go up, hit the highs, come back, hit a lower point, and then stay within that range for quite a long period of time. Now, what we've seen recently has been a big turnaround from the downside, and now we will start to look for gold to settle into a range, and it can do so for a month, maybe even 2 months. If it settles into that range, then the markets will be able to play between that high and that low and bounce around from one to the other, and that's where we, in terms of gold, that's what we look at. Now, in terms of are we going up or down, very much by looking at the charts and just looking at where the trend is pointing, the trend is very much still positive. We are still in an uptrend, and I think we're looking closer to 1,300 than we are looking to $1,000 gold, and that's just at the start of 2015. At the end of 2015, the start of 2016, we were looking at big discussions of talking about $1,000 gold, and it seems like that is a long gone now. So thank you for your questions, and again, please feel free to continue to send those questions in, and we will answer as many as we can on a weekly basis. So please send them in, but until next time, thank you very much for listening.